You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at myaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back. One final time here for the network for the year here. The mad, insane, tumultuous year that has been 2021. Time to look back at all the mad vol that has unfolded this year. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever scintillating, at least we tend to think so around these parts, Options Insider Radio Network. If you somehow got to this final episode of the year and you haven't jumped in on the old secret club yet, well, what are you waiting for? Because this is literally the last show, your last chance to get in for the December Options Insider Secret Club Pro Trading Great. All sorts of cool stuff. You never know what's going to come out the door every month. It's very much a labor of love on our parts. So get your name in the hat. Head on over to theoptionsinsider.com/secret club to begin your journey to the dark side. Of course, however you listen live after the fact, keep sending in those questions, those comments, those insights, those pearls of wisdom. Keep voting in all of our polls and questions of the week. We do love to hear from you guys out there. And let's see who we're hearing from to wrap up the year that has been. From a vol perspective, we are joined once again by the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. Rock Lobster, welcome back to the program, sir. I guess there was just too much vol this year. The meatball, he is a spent force, sir.
He's voled out.
For a guy who lives and breathes VIX to be voled out, that is saying a lot. That shows how much vol we had this year. All right. Let us gird our loins for one more voyage into the world of volatility. It is time once again for the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right. I know some of you like that song, so I let it run out a little bit here, even though it drives the YouTube folks crazy. You know what? YouTube be damned. Full speed ahead here on the old Volatility Views program. And, it seemed kind of wrong to be ending the year in the red here. It just didn't have the flavor of 2021. And, I think the markets tended to agree because right before showtime, we had most of the major indices turning to the green. And as we kick off the show, the S&P is up ever so slightly, almost 0.05%. The Dow closing in on 0.1% to the green. Only red, the last bastion of red out there, is the NASDAQ, off about 0.2%. So we have a slightly mixed market to end the day, but mostly green, end the year, really, here. So intriguing stuff, and I wouldn't be surprised if the NASDAQ fights its way to a green by the end of the day, because why not? It's 2021. Every sell-off can only last so long before the bulls come back in. Sometimes mid-sell-off, they just say, we're going to buy that dip intraday and just drive it all back. That means most of the vol. Remember, we've been off for a couple of weeks here, listeners. We were off last week for the Christmas holiday. And, of course, so rounding out the year here, looking back on 2 weeks worth of vol. And spikes coming into showtime was hanging out at about a 17.5. That puts it down about exactly 3 points from where we were this time 2 weeks ago. VIX cash was at about a 1760 when we kicked off the show. That was down almost 4 points, about 3.9 points from where we were at this time last week. VVIX hanging out at a 110, down 24 points from where we were a few weeks ago. Remember, if you listen to some of our other shows throughout the week, you know that low for VVIX just ever so slightly into the 90 handle very briefly. Didn't last too long. I think it was back in April. So we're about 10 points away from the 90 handle right now. So that's interesting, but I don't think we'll get there before the end of this year, listeners. And the Viking, aka VSPIKEs. That's, of course, the spikes flavor of vol. Coming into showtime was at about a 144. That puts it down 25, almost 26 points from where we were on our last show. Now, if you don't have a frame of reference yet for the Viking, it hit its high for the year back on December 3rd, a very auspicious day. I think we'll be coming back to that day in a little bit. 205.85 is what it hit on that day. And the low for the year back in early November, 128.15. Now, take some of those dates with a bit of a grain of salt because VSPIKEs/Viking has only really been around for a few months and only has data going back to, I believe, October right now. So low for the year is a bit in air quotes, but still, that's kind of the range we're working with right now. So a lot to unpack. We'll get to all the madness, the maelstrom that was 2021 in a second, Mr. Rock Lobster / You know what? Since you're on with us, why don't we bring out your alter ego one last time, Mr. Volman here for 2021. What is he looking at right now to wind down the year from a vol perspective, sir?
Well, there's a couple things. We had a little bit of that future premium came out the last week or so. So that higher vol or higher forward vol we had kind of started to drift a little lower. So that's one. Two, with all the giddy bullishness, we haven't had VIX really go down. So even like a day like today, VIX is 1751. The market's pretty flat. So you're not seeing what I would call traditional market does nothing, vol goes down. What we kind of have done is we have a vol event and then it kind of settles down a little bit and waits for the next one. So we've had that. Another thing I have noticed is volatility in the SPX for a year out. So like that longer term vol is not anywhere close to its low. So just for instance, like let's say if you're looking at live vol and just say, okay, 1 year vol is 20 for SPX, 1 year vol. So that's like the, that's their own IV calculation. But like this year, it had gotten as low as 17.5. So we're not at the bottom of even the long vol range. So in order for VIX to go down, we need a longer period of lower realized vol in SPX. And we have been getting that. So like all the longer term trends are lower, obviously coming off the COVID. But even now, like 1 year average volatility for the SPX is still 14.5. So it's hard for VIX cash to go too far below those longer term trends. Like normally when we get the 9 handle, in VIX or 10 or 11, that long term realized vol average is super low. It's like 8% or something like that. I don't know the exact number. I just know it's like it's kind of a relatively low single digit. And we don't have that right now. So so let's say we're about okay. So we are about where we were right before the pandemic for a longer term realized vol. So we have gotten back to as far as how the SPX is moving. However, the implied volatility is still about long-term implied volatility in the SPX is still 5 to 6 points higher than where it was before the pandemic. So like that notion of that, like, traders that they're still long that protective stuff out there. It's the only reason I know in my mind, if when you're trading, you're a floor trader, why is 1 year vol so high? People are buying it. They could be buying calls. It doesn't matter, but that's still, that's the deal. So, and I think as we've talked this year, we've had a lot of that, that upside meme craziness. And I think that's a lot. There's just residual vol from all that. And until you have more option sellers, we're not going to see those lower numbers. So I think there is a lot of room for vol to go down this year in 2022 coming up. I think we'll see the 12 handle again. I think COVID will be less in the news, mostly on the strength of this new variant being anyway. And as I speak, I got it. I got the second one. So after I hit it in August, I get variant number 2. Just to be a couple months later, although it just is giving me a stuffy nose.
I was just going to say, one of the downsides of giving you enhanced audio for this coming year, sir, is that we could determine things about you you may not even know. Like our audience right now, our live chat audience is very concerned. They say you sound like you're ill, you're stuffed up. So you have COVID again officially?
I got the Omicron the second time, although it's nothing like the first time.
You've been tested? You actually have it?
Yeah. Yep.
What are you doing? You're in the middle of a compound in the middle of nowhere. How you keep getting COVID? What are you doing?
Where I get it is probably from my kid because he started working again, and I guess just a lot of people got it. That's how I got it.
Twice? I was envious of you when all this broke out. I was like, man, he's got a compound in the middle of nowhere. That's ideal for a pan. Here you are. I'm in the middle of downtown, riot city burning down around me, pandemic everywhere. I have yet to have it, knock on wood. You've had it twice in the middle of nowhere.
I know. What's funny is every time I send my kid out into the wilderness, into the world, they catch it, and then they bring it back. So anyway.
Well, we all learned that kids are the vectors of disease. Starting when you send them off to like kindergarten or whatever, you'll never be as ill as you are then. And apparently now they're also the vectors of pandemic.
I don't see how you do anything about it. Like, what are you gonna do?
You just send the kids
when it comes home.
Send the kids into the sea. That's about all you can do, right? That's
I guess. So anyway, so tell the listeners I am okay. But
yes, they're all worried about. They're blaming the clam pirates. They're saying the damn clam pirates got to him. So there you go.
Yep.
I think it was the clam piracy. They left a gift on your doorstep.
Unbelievable, crazy.
Twice.
It's like unbelievable.
Well, let's see. As long as you can hold out for the rest of the show, then you could rest, sir. After this, for the
it's like I would have just telling listeners factors less. Like it's like 1% of how bad I felt the last time.
Because you have all those superhuman antibodies now, so you're good to go.
I guess I do, but I still have a stuffy nose, but I mean, how many times I have a stuffy nose 4 times a year anyway because of allergies.
There you go.
Anyway,
so now we have the quality audio equipment to detect all of the myriad goings on with your health, sir. So a gift for all of us. Like we
said, the crickets are ready. They're waiting.
A gift for all of us.
Killed them all. They're still waiting.
A gift for all of us here in the new year. Well, let's start looking back as well, because it is. I mean, how do you encapsulate this insane year? We could do 5 1-hour episodes just looking at the different periods out there. So we're gonna mix the look back in with our traditional show here, listeners. As we roll on, we're gonna bring out some highlights and lowlights. But let's look at it just from a overall perspective right now to kick things off. You know, I made this supposition earlier in the week, and I talked about it with Mr. Matt on the advisor's option. I believe you and the Uncle Mike earlier on the option block as well, which is the notion that this year, after everyone was so tired, so devastated from 2020, they just wanted a bit of a break, a bit of a respite, and 2021 just pretty much gave them all the finger. It came out of the gate like the most insane year we've had yet. I mean, we started the year with a freaking insurrection in Washington, listeners, and it just went downhill from there. That's the kind of year we had. Of course, GameStop and the meme madness kicked off middle of January. Year kicked off, we had VIX fairly elevated, certainly compared to now. It was almost about a 27. It closed that first trading day on January 4th, I believe it was, 26.97. Spikes in the same level, right about 26.62. So they were still fairly elevated, fairly frothy. You know anything about VIX and the average of VIX. A 27 is still pretty high. People who came into options for the first time when VIX was hovering around 80, that may seem low to you, but trust me, it's not. It got to the high of the year, the closing print high of the year, that same month, January 27, 37.21 is where we closed on the VIX. Almost there on spikes, 36.98. So you have insurrections, you have GameStop madness, you have highs for the year in both of the major vol indices, all in that same month. I put it to you, Mr. Rock Lobster, was January the apex of insanity for the year? Did we reach a terrible crescendo in January that we never quite were able to surpass the rest of the year?
Yeah, I don't think we got as high as that, to be honest. I thought that was I was surprised, but we never sold off. I think that's the funniest thing is that, yeah, like we have not been in the last year, and I am seeing, yep, yeah, that was by far the highest. And that was it. And like we had that 1-day spike. Actually, at the end of the month, we had that crazy spike in vol. Remember that one? And what was it? And I'm still trying to remember the reason for it. I think it's because they were going to raise rates, and that was when they everybody was worried about the taper, and it's too early, or or the vaccine wasn't working. It was something that that was a pretty brutal spike. I mean, it was. I remember because I rode VXX calls like the whole day. It was crazy. Like VXX was up 8 points or something like that, or 7 points in one day. It's like you don't get many vol rallies like that. It was a nuts rally. But anyway, I think that was because they were going to raise rates. I believe so. So. But yeah, we haven't gotten close to that since then. That's the long and the short of it. So
yeah, I'm looking here, and they're saying it came right off the heels of Fed leaving rates unchanged, and so that spooked everyone. The biggest sell-off since October of 2020, back in January, after the Fed coming out and kind of sitting on their hands. So of course, we also were kind of just dealing with the early throes of the meme stock madness as well. So the market was trying to digest, what does it mean, GameStop at 1,000% volatility? What does that mean, right? What does that mean for sustained levels? Are we in some sort of insane times? Which, spoiler alert, we were. And so another thing, I mean, we'll get to that more a little bit later in the show, but just the notion that we were seeing single names trading at these vol levels that sane level heads told you were really not possible, at least for extended periods. Anything could maybe blip 1,000%, maybe intraday for a few seconds. Let's say some crazy tiny biotech, something crazy happens with an FDA announcement. Maybe going into or coming out of that, maybe they spike to 1,000 ever so briefly, but nothing on a major tradable name that was sustainable for multiple sessions. Yet we saw that also in January out there as well. So yeah, it was an insane time. January, we had the Fed spooking people on top of everyone trying to come to grips with what the hell this meant, this new meme stock phenomenon that was creeping into the marketplace. What did it mean that all these one lot Robinhood traders were bidding up all these names to insane vol levels? It was a bit of a 1-2 punch out there. In terms of other levels where we kicked off the year, SPX started the year 3,700. So, and a level we pretty much never really looked back on throughout the entirety of the year. Going to end the year almost at over 1,000 points north of that, 4,780, unless today turns into some sort of bloodbath. But we never really retested that 3,700 level. In fact, we've been north of 4,000 listeners since April. And even when all the midst of all this Omicron madness, this fear, these sell-offs we saw, waves of them coming in October and most aggressively towards the end of November into early December. The lowest we got in October was 4,300, bounced off that level pretty aggressively. And during the Omicron stuff in November, December, the lowest was 4,513. So for all this hand-wringing, all this, oh my, the sky is falling, we were still substantially north of where we started the year, listeners. By the way, lows for vol, VIX cash closing low came on July 7th, 1507. And on spikes, it was actually later, weirdly enough. Spikes got down to about 1533 in July, but it actually came in October. October 21st is when spikes hit its low for the year at 1506. And you remember, if you listened to our show earlier this week for the option block, you know that the NASDAQ vol, so that didn't hit its low until end of August. Intriguing disparity between the different volatility indices out there. Skew, Mr. Rock Lobster, as we end the year. Skew has been quite the talking point, particularly for later Q3 into Q4, as we saw skew starting to get bid up back to extremes. And going back to my old friend, the old reliable, the skew index. According to that very, very prescient gauge, we're back there, Mr. Rock Lobster. To end the year, the skew index pretty much right back at its near all-time highs. Is at 155.20 coming into today's show, up a whopping 15 points from our last show 2 weeks ago. So, Mr. Rock Lobster, what make you of the put steepening going into the end of the year, sir?
I don't know if it's put steepening or call dropping. What do you think?
I'm going to guess the former, because the calls have been crushed and have been crushed for quite some time. Of course, that is the problem with the skew index, right? It takes two moving parts and tries to squeeze them together with not much insight into what's doing what.
Right. I think what we should maybe do a show on the skew index. Because I have that white paper. We should get Russell out here and we should make him defend that yes. That product of his that he invented.
He must defend it. Russell, why does this suck so badly? We blame
Why does your skew index suck so bad? And I think that's another thing for people to realize trading volatility or looking at vol on any platform, right? Like the Toss vol and TradeHawk has a vol and E-Trade has what calculations are they using? How are they doing it? I would tell all listeners to be consistent with whatever vol calculation you use. So if let's say you're used to the spikes, stick with the spikes because you want to keep your apples and apples in the same basket, like trying to look at vol in this place and vol on different platforms and different providers. And, that's one reason why I think the VIX became popular, because it was a consistent thing, right? People figured out how it worked or how it was calculated, and they had some confidence in the index. And Spikes is using a similar, because they're using a consistent methodology, and you can disseminate that, because when you go to 4 different platforms to get different implied vols for the at the money on, let's say, Apple, if you're trading Apple or Google or whatever. So having some consistency is good. So understanding what's in like something like the skew index, like how do they make it? Why is the number always kind of in a range? Like why does it act like it is? Because they're measuring, like when you're trading in the S, you've got the upside curve and the downside curve kind of revolving around the at the money. So there are two functions, I think, right now, because I was just pulling up. I haven't looked at any downside in a while, mostly because everything's been kind of giddy up on the upside. But it's probably time to look again, to be honest. I'm pulling up my fly sheet right now to see what's going on. But I would guess if, at this point, when we've been making all-time highs, the bid has come back into the puts. So
yes, I'm looking right.
Yes, but I don't know. I don't want to just say it without knowing.
Well, while you look up your fly sheets there, listeners, you have a tool at your fingertips that is free that you can use, which I dramatically prefer over something like the skew index. So head on over to cmegroup.com/TWIFO and then pull up the chart for this weekend for the E-mini, which will give you all of this data out there. Well, in this case, I'm doing that. I'm going to let's go about 30 days to keep it kind of in line with that rolling 30-day measure we're seeing out there in VIX land. And if you do that, you'll see, listeners, that it is a pronounced bid to the puts. The calls are getting cheaper. The calls last week were, by the way, the at the money vol going out to the end of January, roughly 30 days, is about a 12.90. And in terms of the calls were 14.5% cheap last week. This week, 17.6% cheap. So the call is coming in a little bit, but the puts last week, 21.3% bid. This week, 30.3. So the puts getting a bid of 9 points. The call is coming in only 3 points. So it definitely is the old put steepening, Mr. Rock Lobster.
Oh, well, that's good. I'm still getting my data. It is not as bad as it has been, though, this year, I would say. So the skew index might be at a high number, but if I'm just looking at the straight downside, it's not as expensive as it has been this year. So it's still up there, but it's been higher. So that's where I am. That's where I am hanging my hat currently. So interesting, but not super interesting given where we are.
Yeah, that's pretty much what the skew index is useful for. Listen, you see these numbers, it merits further investigation somewhere, but don't just take the skew index, what it gives you, as gospel, because again, you don't know what's causing it, and you don't know exactly where we stand versus other frames of reference, other time frames where skew was looking at similar levels. There's a lot of different moving parts, a lot of context to volatility and to skew. Let's get on out now to the futures. And since our last show, listeners, the December future in VIX has rolled off the board. So now that front portion of the curve is Jan and Feb. Coming into showtime, the Jan future was down a whopping 4 handles from 2 weeks ago. And the Feb future giving up almost 3, about 2.8 handles coming into the start of the show. Mr. Rock Lobster, anything catching your eye out there in the land of VIX futures, sir?
Yes, I mean, some of that extra premium came out. So there was a little bit of a ride down. Also, if you're looking at how much potential decay is, right? So a lot of the games I like to play with VIX are how much potential decay is in the product over a period of time. So it's kind of like lots of different ways to sell vol. But VIX is unique because you can buy puts and sell vol at the same time. I know that sounds a little counterintuitive, but hey, that's the fun of it. So, but right now, what I would say is, like a Jan 19 put in VIX is $1.60 in the money, and it's only cost $1.40. So again, I look at, like, as time rolls on, how could these things perform? So while it's not as crazy as it has been in the past, the futures being high also can get you to back into some cheap options. So the Jan 17 puts are they're somewhere between 30 and 35 cents. You can probably buy them for 35 cents if you wanted to, actually, right now. And, just going on, where VIX could settle, they're only 35 cents from being in the money. So that leads you to kind of a lot of interesting trades. So from a Jan point of view, you could kind of, let's say so the higher the contango is, the more I like to do kind of an asymmetric type trade where you buy a lot of puts and then you buy like 1 or 2 calls. So you kind of ratio them, sometimes for me like 1 to 5. And that way, if you get that quick VIX pop, because the back end is, like we said, the puts are already bid in SPX, right? So it's very easy for vol to kind of to catch fire again, and have that quick snap up. But at the same time, right, there's a huge amount of premium that could just come out of the whole thing. And that's why owning a bunch more puts gives you a chance to have a profitable trade. So I'm still trying to make it as, I don't want to oversimplify it, but that's kind of the general idea is, when do you want to leverage puts? For me, I want to leverage buy a lot of puts when there's a lot of potential decay in the curve. I buy a couple calls, right? Because you never know what's going to happen. And that's what I think is interesting in the January cycle right now. But also at this time in the cycle, we've got still by next, let's see, we'll go through this week. So after Wednesday, we only have 2 weeks to go, and the 18 puts are already 80 cents. So like it's from a value point of view, we do have some, you have the futures are kind of juicy, which gives you the opportunity to buy some cheaper in the money puts for VIX. And then you kind of see what happens. So as a trade, that's what I like to, well, anyway, that's what I'm looking at, right? So trying to buy a bunch of puts with only a few calls and trying to let the natural flow of vol going down kind of pay the bills on the trade. And if VIX does happen to pop, you just have to make sure you dump your calls. And then you might end up with puts for nothing and you get to do the right again. So a lot of when the curve is like this, you don't expect a lot to happen on the upside when you're in this much contango, right? Because the futures, the forward vol is kind of a cushion in general. Even if VIX catches a bid, the futures don't move that much. So you actually need a real kick in VIX to make things run at this point, the steeper it gets, which is why I lean short. And then you see what happens. So there's lots of ways to trade the vol products, but I like to trade it with kind of the gravity of what the futures are doing in my favor. And, and leaning one way or another, long or short, depending on what it looks like. But even now, I'd still lean short, but I would also own some calls. So that's because the futures are so expensive. The Jan future is relatively expensive, how I look at it, versus historical. But it was actually much more expensive last week. So the juice has come out of it. So we have 2.5 weeks to go, and it's $2 over, and it's $2.15 over. So there's plenty of juice in that future. So, but then that gets you into, okay, VXX looks like an interesting trade, UVXY, because again, these products own these futures and they rot. So you can do things multiple ways, but that's how you can use the future, right? Because the future gives you the future does its thing, and it gives you slightly different performance in VIX. It gives you slightly different performance in VXX and UVXY, depending on how those products use the Jan future. So once you kind of figure that out, it's a lot easier to trade the underlying products. So that's my take on the Jan future being a little bit juicy right now.
Let's look at those futures, because one of the narratives we've seen throughout the year and pretty much throughout the pandemic has been VIX futures kind of struggling to keep their heads above water. They kicked off the year in January. January, like I said, was the apex of crazy for the year. VIX futures put up about 5.2 million contracts in January. That was actually almost a 20% decrease from January of 2020, which, as you'll recall, was still pre-pandemic days for the most part. We were starting to get inklings that something was afoot, and the markets were starting to get a little bit roiled going into February, but nowhere near what we saw in March. And yet that volume was still almost a 20% decrease from January of 2020. And the most recent numbers from OCC, obviously we don't have the final numbers for December yet, but looking at the numbers for November, it was 5.04 million contracts. So you're talking a substantial decrease, almost exactly 200,000 contracts less at the end of the year, even though that by itself was almost a 43% increase compared to November of 2020. So also some of that has to do with the frame of reference. We've seen pathetic VIX futures numbers for quite some time. So comparing that to a pre-pandemic number versus a post-pandemic number, a bit of a different story out there. Let's go along here to see what else is lighting up our tape. Let's get on out to the land of spikes. On our last show, we still had spikes pretty much dominated by that big, effectively, five-legged trade out there. We had the 2430 vertical, that was about 1,000 times, versus the D's 2118. Actually, no, it was the 21 puts were about for 1,000 as well. So it looks like that was the three-way. It was the 21 puts versus the 2430 vertical. And we also had someone coming in doing about a 500 lot of the 21 calls versus the 2018 put spread. All that, of course, has rolled off the board with December expiration. And not surprisingly, we haven't seen a lot of big new positioning here as we wind down the year. End of the year, kind of like what we see in August from a volume perspective, listeners. In terms of volume, though, the busiest days we saw for Spike, looking at the numbers here, the busiest day for the year in Spike was December 13th, 6,800 contracts going up that day. That's when someone would think was rolling some of that DC and taking some of that off the board. October is right behind it with 6,024. That was on October 21st. And November 18th, 4,706 contracts. Speaking of contracts and a whole heck of a lot of nothing, that's pretty much what we got going on with VIX right now. About 110,000 contracts on the tape as of a few minutes ago. That's a whole heck of a lot of nothing when it comes to VIX. Remember, listeners, I told you on the last show, the ADV was north of 700. It was around 729 on our last show. Enjoy that, because it wasn't going to hang out there for long, and that's the case. It's coming into today's show. It's down 53,000 contracts, down to 658 right now. So a substantial drop-off out there in all things VIX. Let's look at the numbers really quickly for the top 10. By the way, our top 10 positions in VIX right now that DC has rolled off the board, it's pretty much all Jan, a little bit of June. It's pretty much exactly 50-50, puts the calls right now. So maybe market a little bit of a coin flip as to where we're going forward. It only cost you 100,000 contracts to break into the top 10 right now. That gets you to the aforementioned June. Isn't that crazy? The June 70s are the number 10 position in VIX right now with almost exactly 100,000 open. So whoever out there is piling into the 70 strike, I tip my hat to you. You've made it into the top 10 in VIX right now. Number 9, 105,000 of the Jan 20 puts. Number 8, 106,000 of the Jan 60 calls. Number 7, 107,000 of the Feb 17 puts, our first and only Feb. The rest is all Jan, listeners. Number 6, 109,000 of the Jan 22 puts. Number 5, 110,000 of the Jan 70 calls. So some people have some axes to grind on the 70 strike. Number 4, $1.18 of the Jan 40s, the comparatively reasonable Jan 40s. The number 3, 126,000 of the very comparatively reasonable Jan 25s. And the top 2, I should say, are some more puts. The 211,000 of the Jan 19 puts. Number 1, 214,000 of the Jan 18 puts. Speaking of puts to calls, if you're curious, when that put call ratio in VIX, and when did puts lead the dance the most? Because that was a thread we saw repeated many times throughout the course of the year. A lot of people were interested in VIX puts in the latter half of the year, and they got its highest in terms of trading volume, almost 1.99, so almost 2-to-1 puts over calls. That was on October 8th. And in terms of the OI, how did the OI shape up the most put heavy? That was about a 0.8. Never got quite as high as the trading volume. And that was back earlier this month on December 8th. We got a lot to unpack here, so I'm not sure I'm going to spend the whole week going through. It's a pretty light week here, listeners, from an overall VIX options perspective. Today, like I said, about 110,000 contracts on the tape. Yesterday, 352,000, so pretty light. Wednesday, 319,000. Tuesday, 310,000. Monday, 281,000. So nowhere near a lot of activity. But I will put this out there, looking back at the year that was 2021. Mr. Rock Lobster, if you don't look at the notes, because the answer is there, if you had to hazard a guess, what was the busiest day of the year for VIX options? What was it, sir?
Oh, busiest day? Well, I just have to go that spike day. What was it, January 27th?
It was around there, and that's a good guess. Now, I put a caveat out there because the data I have here shows December 3rd, but I'm not sure if it all encompasses. I looked at a couple of different platforms, including Trade Alert, to pull these, and I don't think Trade Alert goes back that far, unfortunately. So I will have to do a little bit extra digging to compare. That's because that was my first guess as well. But we do also know that in terms of sell-offs recently and aggressive volume, we did see a lot of aggressive paper on December 3rd. So that's the day we're going with right now until I can get a firm confirmation on the actual volume on that last day there in January. On December 3rd, though, that was right after that sell-off we saw. It was kind of the latter stage of the Omicron sell-off. We saw the sell-off kick off on November 26th and sell off. Then it seemed like the worm was turning. We were starting to rally, and then it came back and just clipped the legs off of it again. That was on Friday, December 3rd. And that seemed like that second wave of sell-off really spooked a lot of people. And we had VIX closing back in the 30 handle that day, 30.67. Remember that, listeners. And we saw that day 1.065 million calls and 964,000 puts, so a total of about 2.03 million contracts. Not many 2 million contract days out there in VIX. So I'm going to go out on a limb and say that's probably the busiest day, but I will go back and check to make sure that that Jan 27th or 29th date to see exactly. By the way, SPX SPY, let's look at SPY, the one you guys trade the most. Similar levels, their busiest day was kind of a tie between Monday, the 20th of September, with about actually a little bit over 9.1 million contracts that day, and also December 3rd, where they did a little bit under 9.1 million. So that December 3rd day is definitely up there. If it's not number one, it's definitely number two. But I do want to go back and check to make sure. Coming back into what's going on right now, VXX, the products you folks love to see erode, got some more erosion in over the last couple of weeks. Down 3 points from our last show. Coming into showtime was at about an 18.5. Again, decent paper on the tape for them, but about a third of what it's putting up lately. The ADV out there still over 300,000, about 300 to 6,000, even though that's down about 11,000 from our last show. Today, so far, about 110,000 contracts on the tape out there. If you're wondering high and lows for the VXX and range for the year, take some of the range with a bit of a grain of salt. Remember, both VXX and UVXY had their reverse splits this year. So that kind of gums up the works. That's why you're seeing the low and high so close to each other in April and in May. The low for the year, 981 in terms of what it was printing. Then it reverse split, of course. And we got that reverse split print. You actually got up to 4840 after that. So the low came on April 16th, the high on May 12th. And of course, coming into today's show at about an 18.5. So a whopping 30 handles below that high set back in May. The busiest day for VXX, actually September 20th. That also lines up with what we saw in SPY. SPY had a very busy day, September 20th. VIX didn't do as much paper as you'd think that day, which is a kind of weird, disparate volume going up. But September 20th, the busiest day, not December 3rd for VXX, did about 685,000 contracts that day. 368,000 on the calls and only 317,000 on the puts. So also weird, calls outnumbering puts in VXX, not a thing that we see very often out there. Let's just look really quickly at the top 10 in VXX right now. 60-40 puts over calls. Only cost you about 15,000 contracts to break into the top 10 of VXX. The top position out there in VXX right now, almost 31,000 of the Jan 22 puts. Not a heck of a lot going up today. The D's 19 calls expiring today are the most active with 10,000 contracts. Mr. Rock Lobster, anything lighting up your tape this week for VXX or looking back on the mad year of 2021? Anything that resonates for you for VXX?
I think it was a more what I would just kind of regular VXX year, in that we started the year at an 80 handle and it's $18. And as you know, we know the stock's gonna split again, and we're kind of doing that. Okay, how low can VXX get by January? The game. So I'm sure we'll probably get if this vol pattern keeps up, I'm sure we'll get some kind of a split by sometime mid next year when VXX crosses $10. So, it did what it normally does actually this year. It started the year at some number and it lost 80% of its value. So once again, consistently crappy as a product, which is good. Like if you want to trade, I think boring is good. I'm not in it for the excitement anymore. That was like when I was a floor trader, it was fun. But, when you're in front of a computer, how much excitement do you want? I just really want to make money. So
when you're in front of a computer and you have COVID every other week, you can't handle a lot of excitement.
You can't handle very much. So it's the kids, you have the kids, and that's the deal. So but anyway, also as volume, I'm confirming your December date. The other terms never got that high for vol. So there's a couple dates actually that were surprising, that were very close though. But I believe you're correct on your vol. So it's going to end at the bottom of the year. I think it's going to close at the low of the year from what I could see. I'm pretty sure that's what it is. And then we reset the clock for next year, and hopefully we'll get another 5-for-1 split and have a lot more fun with the product. And good times will be had by all. At
this point, they're splitting in like mid-January. I mean, there's not much left to erode before they got to do that. UVXY is already there almost. That's intriguing stuff. Speaking of UVXY, let's just get to it now. UVXY coming into showtime was at about 12.5 when we kicked off the show. It's probably, who knows, probably eroded another 2 points since we started talking. 12.25 now. So that puts it down 3.25 points from where it was 2 weeks ago. In terms of ADV, that's still holding firm around 207,000 contracts, down about 6,000 from this time on our last show. We saw closing in on 100,000 contracts on the tape, about 90,000 as of a few minutes ago. Top positions right now, 80-20 calls over puts in UVXY, which is A, surprising, and B, probably reflects the fact that a lot of the near dated paper just rolled off the board with decent expiration, and people haven't really gotten around to repositioning with the holidays here. Number 3 in UVXY, the March 70s. Number 2, the March 50s. So there's some weirdness afoot when those are the top spots out there in UVXY right now. By the way, UVXY, busiest day, again, kind of all over the place for these. November 26th, which is a day you might expect other names would hit their apex for volume, because that was, of course, the big Black Friday sell-off. But then again, also, that's Black Friday. Not much is open. Markets are kind of thin. But UVXY made their high for the year that day, 456,000 contracts on November 26th, 294,000. Again, the calls leading the dance, 294,000 on the call side, 162,000 on the put side. Is everybody financing their puts with call ratios or call verticals? Maybe that seems like they can't have been buying calls out there. That maybe they could have. We were seeing a pop, obviously, but if you're buying calls in UVXY, we've learned by now, quick on the trigger finger is the only description you could have, because that bid is kind of short-lived. So intriguing stuff out there. The high and low for the year, same deal right around that May timeframe, because they eroded into their reverse split and then reverse split. So these highs and lows for VXX and UVXY, kind of take them with a grain of salt. It's always gums up the works when you got reverse splits in there. But the low for the year, 406. Got down to a 4 handle, listeners. Remember, we were waiting for a while because VXX announced theirs, and we were waiting. When's UVXY coming? They took them a little longer to get their act together. And the high for the year was right after that split, 38.12. So even though it reverse split to 40, first day it closed at 38.12. So it gave up 2 points right off the bat out there. Not a lot going on today out here. So anything resonate for you, Mr. Rock Lobster, about the insane year that was UVXY, outside of the fact that it's at this pace, it's probably going to be splitting next week?
Yeah, I know. We were looking at the 10 puts are only, I think, 13 or 14 cents. So, yeah. Now, what will hasten the split if VIX trades 14? So that would hasten the split in a big way. And I think that's the wild card, the big question. Can we see the bottom of zone 2 for any length of time? Because, you forget we've been doing this show for 10 years, right? And if we think about it, I've been doing option block the option block with you for 10 years, but you see, like, if you would normally see a VIX at 17.5, we'd go, wow, that's pretty high. Now it feels low. So it's, again, with perspective of a long period of time, this feels like a relatively low number given what's been going on. But vol can find all kinds of new low levels. It just hasn't done it lately. So that's, I think, UVXY at this point, with where I think all you're going to see really is just kind of some slow erosion in the products. the VIX moves at this point, I don't think there's the willing seller to really get the vol below 16 or 15. It'd be nice, but I don't think you're going to see it. So until there's more certainty out of all this, too much in the air, I think, right now. So, but it's the same stuff that's been in the air all year and the last 2 years. So I think just at this point, UVXY is kind of a slower rotor, and probably some kind of controlled premium selling strategy would work better. Although I would caution anybody selling any juice in these things because they're not used to it. You get a nasty surprise and you wake up and you're grumpy and unhappy because all of a sudden UVXY started to go up. So there are ways to do it, but you probably should learn how to do it. Learn how to walk before you run, so to speak.
Indeed. And we got to run out of this segment. We've already talked earlier this week, listening to some of our shows like the Option Block, about the meme stock madness, the single name vol, GameStop at 1,000%, also on the advisor's option. So if you want more of a deep dive into some of the single name stuff, check out those shows from earlier this week as we keep on rolling into the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everybody. I see a lot of people chatting about predictions for the end of this coming year for VIX. I think I'll wait till the Rock Lobster's a little bit more with it. I won't force him to do a vol prognostication for the end of the year. I think next week's going to be our big prediction week. We'll get all the ducks in a row. Even though if you heard Uncle Mike, he couldn't contain himself. He already was hitting on things like Bitcoin at 13,000 to end the year and a bunch of other crazy stuff. I think next week is going to be our kind of big prediction week. So we'll start getting the ball rolling there on the option block all the way through to vol views on Friday. A nice slew of predictions throughout the course of this coming year. Of course, we'll also have to go back to our end of year programming and beginning of year programming to check out all the predictions we may have made and see how they paid off. So a lot of behind the scenes grunt work that has to be done as well out there. We also have people in the chat chiming in, like Luigi saying he thinks the virus is going to flame out next year. VIX is going to be single digits. Ooh, back to 2017 vol levels, eh? It says people are ready to get out and spend money. Companies that can control price point are going to jump. I don't see VIX over about 18 for the year. However, if the Fed makes a huge basis point move with interest rates, that is all changing. Yeah, that Fed is very much the wild card there, right? People are expecting that to kick into gear around March. How aggressively that happens. Obviously, the Omicron and whatever, hopefully no next variant are also the wild cards there too, but it seems like we may have a grip at least on that. We've got, he's also saying he repositioned his hedges on TLT and PSQ this morning, just moved them out past the first quarter, added a little energy. And he's been listening to the advisor's option, so he took Matt's advice and he's putting on some of the low delta SPY puts. Matt has been talking about Mr. Rock Lobster. He's been back testing this strategy because he's always running his back tests over there. Whenever things pop up that look interesting, he tries to test them out. And he's been looking at these, what he calls devious little puts in SPY or SPX that are far out, like a year out, and no delta, garbage delta puts, but getting them purely for effectively the tail risk and the Vega component to them, and how they can actually perform pretty well if you're pretty diligent in how you take them off. So that's been kind of an intriguing one. If you haven't heard that yet, listeners, go check out the most recent episode. Actually, no, go back 2 episodes for the advisor's option called How to Pay for Puts, where we break it down, and then check out this episode we just did. Matt also talks about some ways to take them off that could make it a little bit more viable of a strategy out there. As we keep on rolling, really quickly too, we also have a audience poll going right now to wind down the year appropriately enough, looking at the year itself. And we asked you guys, 2020 record year for options, 7.5 billion contracts changing hands. We don't have the numbers for 2021 yet, but we're threatening 10 billion. We beat 7.5 billion by mid-October, pushing close to 1 billion contracts a month now, listeners. So if you add it up, it gets pretty close to 10 billion. So the question we have for you is, can 2022 possibly top this record year? Yes, no, or are you busy, too busy, I should say, buying GameStop calls? Mr. Rock Lobster, what do you think our audience is? If you have a voice, have at it. And more importantly, what do you think our audience is choosing?
I actually think we'll be busier next year than this year.
Wow. Okay. I'm down with it. I hope that's true. I mean, from a business perspective, I hope it's true. From a societal perspective, maybe not. Look what happens when we have great record years, right? Society tends to suffer. So maybe we need to take a hit for broad society. But yeah, that would be interesting, certainly. And again, we have so many new players here now that seem to be hanging out. You know, the initial thought was that they're going to come in and leave with the pandemic, but they're still here and they're putting up close to 1 billion contracts a month. If we come close to that pace next year, you're talking close to 12 billion contracts. So yeah, it could easily be that way, even though it does sound insane. And our audience agrees with that. 58% just saying, yeah, the inertia is going to carry us. We're going to have another record year. 38% saying no. And 4% saying you can't respond. You're too busy buying GameStop calls. And now it's that time, listeners. It is time to open up one final time for 2021 and check out our crystal balls.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners. Weirdly enough, this is one of those days where VIX and Spikes didn't really seem to want to do a heck of a lot during the show. We kicked off the show, both of them around 17.5, and they're pretty much ending the show with both of them. Spike's a little bit lower, 17.35 or so, and VIX Cash back up around 17.5 or so. So a whole heck of a lot of nothing really over the course of the show. And you know what? I'm actually looking pretty good. My goodness. I am actually within the 10th of a point margin of this is a 2-week prediction, listeners. I should get some sort of extra fanfare. Producer, put a little extra cheering perhaps under this on the podcast version. 1728 is what I predicted. Oh, an eternity ago, aka 2 weeks ago. Spike's at a 1734 right now. So definitely within my 10th of a point margin of victory there. So I'm taking it. Winner, winner, chicken. That might be one of my more impressive ones because for 2 weeks in the holidays, I mean, anything could happen the final day of the year. VIX is so hard to predict at the end of the year. It's one of the more difficult times. So to get within that margin of victory, I'm going to give myself a little pat on the back. Sebastian, he was smoking something. 29.29. We had Jem Carson on from Kai Volatility on the show. Mr. Jam Croissant. He was feeling a lot lower, 15.99. And we had Matt from MyAx on as well. He was at an 18.5. So he was the next closest. Well, yeah, between him and Jam pretty much, but neither of them anywhere close to our 10th of a point margin of victories. Mr. Rock Lobster, what do you say to that? Bask in that victory a little bit. That's a pretty good one.
So you're saying I have to bask in your victory?
Yes, you do. It is required by law.
I'll give you credit. That was quite a William. I'll give you William Tell for the end of the year effort.
You know what? I have to tip my cat as well because after I did my prediction, Luigi accused me of scumming him in the chat because he said he was at a 17.25, which it turns out he was. So he's also within the 10th of a point. So you know what, Luigi? We just sent you a gift, or we sent you one right now. That's pretty impressive. Well done there. Well done. Nonetheless, there that was impressive. I wish I saw his. Then I would have said something about it at the time. But yeah, he thought I scummed him by 0.03. But it was just two genius minds thinking alike out there.
So you. It's not enough you scum your guest hosts on this. Now the listeners.
Yes. There's scumming all of the listeners.
So low you cannot.
No one is safe from the scumming here. I'm just saying, let's just bask is what I'm saying out there. At the end of the day, it's hard to get these things right for 1 week, let alone 2. And I do tip my cap to you as well, Mr. Luigi. We'll see. Well, maybe the drawing will come up Luigi we haven't done the December crate yet. So maybe when we roll that dice next week, you're definitely in the hat for it. So that'll be, you can win. You can see what all the other folks, I'm not sure if you've won one yet or not, but either way, it is fun. We had a bunch of other people out there. Todd was at an 18.20. That's not bad. 18 for JVC. Again, not bad. 14.5. Well, handles all over the place. 20.5 for Super VIX. Mr. Unlimited was 20, I believe. 18 for options queen. So she wasn't looking terrible. 16.5 for Nichols. No, Frank. 17, even 17. He was closer than a lot. Not bad, Frank. And let's see. All right. Well, good guessing. So you know what, Mr. Rock Lobster, magnanimous in victory that I am, I shall allow you to go first, sir. What are you feeling for this time next week in Vic? We'll do the whole end of year prediction next week, I think.
For this week, I'm going to say 1750.
17.5 for, so pretty much a whole lot of nothing for this time next week. And our producers have meatball in there. Let's fix that to the Rock Lobster. There we go. 17.5 for the Rock Lobster. That leaves it to me, the eerily prescient one, to come in. And yeah, next week is kind of beginning of the week. Beginning of the year, obviously, will we see a lot of volume. Traditionally early on, not a ton. We could see a bit of a rally to kick off the year as people are coming in, kicking in their funds, and maybe they close things out at the end of the year. They want to buy in again. So we could see a little bit of vol coming off. I'm not feeling an enormous move either, though. I'm going to say high 16 or low 17 handle is what I'm kind of feeling. I'm going to say, you know what? Since you're a 17.5, I will be nice and give you a little bit extra room. I'm going to say 16.85 for this time next week, listeners. All right. That music means we've come to the end, not just for this week for Volatility Views, but indeed for the epic year that was, listeners. Man, what a year it was. Just insanity. We could do many shows. I don't think we're done really recapping 2021. There's a lot of other nuggets that will percolate in throughout this show and all of our shows throughout all of 2022. Let's hope, fingers crossed, let's hope 2022 kicks off a little bit quieter. I don't think we need any repeats of 2020 or 2021 on our hands. At least a little bit saner. Hopefully you and all your friends and family are avoiding the Rock Lobster family plague now and are staying safe, staying sane. Hope you all have a great New Year's Eve and New Year's holiday, really, and a new kickoff to the year. We appreciate all of you out there for taking the time to listen to Vol Views and to everything else you put here on the network. We love you all, whether you're in there live, whether you're on demand, whether you're sending in questions, voting in our polls, anything you do to engage with the network throughout the year. We appreciate all of you. We literally could not do it without you. We'd have no network. It'd just be me talking into a microphone here with the Rock Lobster. Nobody wants to hear that. So we are deeply thankful, deeply appreciative for all of you out there who take the time to listen to our stuff throughout all of 2021. We're looking forward to seeing you back next year as well. And of course, you know where to go to check out all things Spikes. MyAxeOptions.com/Spikes is the place to go. Mr. Rock Lobster, hit them one more time. If they want to come to learn about Vol in the new year, where should they go? What should they do?
Yeah, come on over to optionpit.com and put some learning on. Go to our memberships page and look at all the different products. We have lots of different products that specialize in different ways to trade options. So you can learn and trade and do at the same time, all in one place, optionpit.com.
All right, optionpit.com is the place to go. We got to go on out of here, so that's going to do it for us here on the network this year. Again, thanks to all of you out there who've engaged with our content. We love you all. Stay safe, stay sane. Have a great kickoff to the new year, and we'll see you back here next week. Another episode of Volatility Views.
Volatility Views is brought to you by MyAxe, one of the fastest, most efficient trading platforms in the world. MyAxe is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's Volatility reimagined. Learn more about Spikes at myaxeoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.